to my mind, it's going to pick up quite a bit from here. Firstly, I think the Dimension Data NAS space had nothing to do with the World Cup, even though it sort of pops up on the senior. But it does actually help almost highlight the fact that we up and open for business as we're riding on quite a crest of quite good, you could say, marketing publicity at that stage. And I think from that point of view, we may well see some. Some further things coming through. I think there's in a sense, the dearth of activity in the second quarter has built up a bit of a pent-up release that we will see later this quarter and early next quarter.
We've been throwing around a couple of scenarios, specifically on the Business Tonight news desk, in terms of how long this recovery is going to take to come to the full picture. And the one scenario built in by Clem Santa, a well-known scenario planner, saying that there's a hard time scenario, which means that we're going to languish at the bottom for quite some time, only seeing a recovery spike in 2011. Now, if you take that scenario and put it into merger and acquisition activity, surely it changes your forward-looking picture.
Well, I think certainly bank financing is still a bit of an issue. Companies are going to have to rely on the cash they have to a large extent, and yes, I think it's going to take some time to before that capital is freed up or access to bank financing is freed up. It's going to take a fair amount of time before that happens, and we will then see more of a kick on towards M&A activity.
Some changes to the advisory league tables. Rand Merchant Bank still maintaining first position, working on 7 deals worth some 3.3 billion rand. But Deutsche Bank has taken second place, and they've taken that place from Nedbank Capital. Do you think we're going to see more changes in this advisory league?
Well, I think it is something that does tend to change from quarter and certainly from year to year. Bankers are hungry at the moment, and I think we'll certainly see a lot of competition, a lot of competitive sort of desires to really ramp up their volumes and ramp up their figures, and I think it'll be one of those watch the space scenarios where we'll have to see who comes in the finishing line, who comes in first.
Thomas, thank you very much for your time. Thomas McLaughlin from Merger Markets, still in the studio. Here's Chris from Investment Solutions. Today, the special dividend, the potential special dividend that will be paid out of the MTN, saw MTN shooting to the top of the top 40, up 3 1/3%. At the close, up just under 3% at 113 Rand and 5 cents. Phuthuma Nhleko, the CEO of MTN, also saying they do not need to make any acquisition to further increase their dominance in this territory.
Yeah, I think in a sense, MTN is certainly at a crossroads, and by paying the money back, it does suggest to the shareholders that firstly, they're not looking for expensive acquisitions which may actually dilute their holdings. And I think that's been a concern of MTN shareholders as to what extent is any further expansion by acquisition going to actually dilute them. They actually got into the expansion phase at a very good time when they could pick up good value, etc. But the value, I don't think, is there to be picked up in terms of acquisitions. It's there to actually be picked up in terms of actually growing the business organically at this stage. In other words, to get the Iranian market by the scruff of its neck, to make sure that it cements its position in Nigeria, for instance, and there, it's and even in South Africa, returning to its South African roots in a sense, to actually consolidate its position here in terms of the quality of its service, etc. And I think once that starts to take place, when the growth phase eases back, it means that the cash flow to shareholders is going to be rising.
Chris, the market missed the Dimension
Yes.
Data story completely.
Yes.
A very well kept story by
Yes.
their investor relations, complete surprise when we got to our
we
desks
were
this
watching
morning.
soccer, exactly. We were watching soccer while they were busy quickly getting a deal together. And while I haven't, got my teeth into the details of it, I think it is interesting. Dimension Data, completely different business to what it was at the height of the tech bubble when it was listing on London and in the London top 100, etc. I think it's got a good core business at this stage, which is attractive and is offering value, etc. And basically, tech has now gone full circle from when it was the go-go era, and it's now cementing in the sense of, do you value it as value or growth, etc. In other words, the tech sector is becoming normal, and suddenly people are starting to be interested in that sector again.
Bit late. They should have been interested way
Exactly.
before the corporate activity came to the table. ShopRite up 1%, saying
Yes.
that turnover is increasing 13.6%. That's for the 53 weeks to the end of June.
Yes.
And a good result. The market celebrating that.
They're managed well. They're in a very good market space as well. Their expansion into Africa has been well timed and also well positioned. And ShopRite Tech is certainly is something that is one of your leading investment stocks, not just in that sector at the moment, with a good mix between local and foreign operations. And there it is.
Chris, the market is hanging its hat on the negative news out today, and that being the Fed minutes for June,
Yes.
which has got everyone concerned over the outlook for US growth.
Yes.
But we have seen a better stance on the jobless claims.
Yes,
They've come
today
down.
was better. Yesterday, the retail sales number was not great. It was worse,
down for the
etc.
second month in a row out of the US. This is what you're talking
Yes,
about.
yes, that's right.
But corporate earnings are coming through strong.
Corporate
We've seen
earnings are coming
Alcoa,
through.
Intel, JP Morgan, all exceeding expectations on the
Exactly.
earnings front.
But I think what's now happening is to say, where's it coming? Is it top line or bottom line? And we're also starting to say, is this not priced in already? Right. In other words, do we not need to see more for the market actually to take on a higher thing? So the fact that the earnings are good and the market not responding does suggest that
It's already priced into the
already
market.
priced in, yeah.
Interestingly, we managed to hold our head in positive water today.
That was nice. We dipped into negative territory because what seems to happen, we open, it's fine, and then we start to get to the US close, and then the market, or the US open, the market takes a dip. The US open, not a great open at all, but we have seen our market just
And I should have said
take
we're
a little bit
holding
of
our head
thing.
above the water,
Exactly.
rather. You can't really go
Exactly.
into positive water, can you?
No, exactly.
Why are we seeing, is it really the corporate flow that we, on Dimension Data,
Yes.
on MTN,
Yes.
that is holding us up?
Yes, I think so. I think that is one of it, and I think the strength of the rand is one indication that we are seeing foreign interest in the market still, and it's we are an emerging market player, and I think it is still well recognised that.
And look at this
emerging
euro
markets,
dollar,
yeah.
Chris, there, 129.06 just a minute ago. We are
Exactly.
going weaker. It looks as though that 130 level on the euro dollar is almost in play.
Exactly. We need to realise what is one of the things that has triggered the rise in the euro. And one of the things is that, firstly, it was oversold. You saw an accelerated downward thing with the Greece setup. But what's also happened is that the Chinese now has relinquished their peg to the dollar, which means that the Chinese currency is appreciating against the dollar. It was one of the props under the dollar, right, that was helping to sustain it. And then while Europe had its Greek moment, as it were, there are 46 out of 50 states that could quite easily have their Greek moment. And with Congress heading to a limbo period to the elections, it's almost like we hope nothing happens. And I think the Greek debt situation, the Germans were hoping, let's hope nothing. Let's get through our elections first, and then we'll try and deal with it, because we know the electorate will not like any bailouts and that kind of thing. And I think Congress is doing the same, and I think the markets may move ahead of it, because a lot of the stuff in the states and the cities, the various individual states in the US, cannot actually be left for much longer. The teachers and the policemen and the the teachers and the firemen are losing their jobs, or the jobs are going to be going fairly imminently as states have to cut back and communities have to cut back.